Today is the 31st of July 2010, and in today's silver log, we're going to look at silver on the technicals along with gold. And this is a daily time frame. Silver is not 1762. Free stock charts must have the London AM close because it broke this level at around 8 or 9 in the morning on Friday. It's actually now at 18. So just keep that in mind that it is not down towards this level as of now. It did have a little pop. It should have a green candle upwards to this 18 level. With that being stated, we can see now that we have a very big level of support roughly at around this line. We can draw a trend line that connects these areas towards here, giving it a descending triangle. Usually these things can balance out on the path of least resistance. When I see this chart, I really don't see really any particular path. It did have a bullish run here and then consolidated through time. This is another reason why it seems, as far as the charts are concerned, that everything is looking very, very neutral. As far as the moving averages are concerned, we'll start with the blue line, which is the 50-day moving average support in the months of June and the 1st of July. It broke down below the 50-day moving average. 50-day moving average starting to decline after that sell-off. It found support at both the 100 and 200-day moving averages. You can see here how it rode the 100 very nicely, but the 50 was resistance. And after it had a couple of days at this level, it was followed by two big selling days, which broke below the 100-day moving average right towards the 200-day moving average. It had another rally up towards the 50-day moving average. That was the second test of the declining 50-day moving average, and now we're back to 18, so it looks like a third test is going to be on its way. It's had two tests of this 200-day moving average. They both were pierced below it, but at the same point, they have both been successful. It is still in this indecision mode right now for silver. And if we have that break below the 200 and this trend line, then the next little area in which that I would be focusing on would be the Fibonacci from the February lows, which would take us down to a level of, let me bring it back to the daily time frame, up downwards to about 16 and 2/3 as a potential area, as it is also trying to find some levels of support at this Fibonacci level at 1780. I was asked to do a similar type of chart with the silver that I did with gold, and that was the upward trend. And I had a lot of support for that video, so thank you very much. And as far as what I could do for trend lines, it's a little bit different. And what I like about spreadsheets is that they can you can do mathematical formulas to get pretty much what you want. What I like about this is I can create parallel lines. And when I create parallel lines, I like to set it up to the most accurate point, so we could create a parallel line in here and then another one in towards here. You can either put the trend line here, you can put it here. What I like to do is the same distance, which means that for now I can only go by eye, and it's pretty much along this area in towards here. Right as of now, there isn't too much of a need to have an exact level, but nonetheless, you can see that when a trend line breaks, what happened on this case is it recaptured its same ascension trend, its rate of ascension, meaning the rate that silver was going up in 2004, 2005, 2006, 2007 has been the case thus far with the over the last year and change. It found resistance at this trend line at the end of 2009, and we can see that it's moving further away from this upward rise, and it's right now in the middle between this level and this level as of now, as we are in this indecisive moment right now. We're going to move it on to gold. Gold, like silver, has levels that are not correct. It's about 1180 something right now for gold. When we look at this on the daily time frame, recently gold has been taking a bigger hit. And what we can see within the gold market is that we are in a bearish trend over the last month or so, month or 2 months even, for the gold COMEX, and this would be the trend it would be trading. And given the fact that we're at about 1180, we are now back to the top part of this trend, even though the candles don't show it, because it's at around 1180. And because this trend line's resistance is at 1186, we are getting back towards this level. As far as their moving averages are concerned, it has yet to have touched the 200-day moving average. And what that tells me, with the recent move of gold being weaker than silver, is that before this period, gold was doing much better than silver, which was the case. Thus, its 50-day moving average is now declining. It broke through it on the July the 1st. It found resistance afterwards. It then found support at the 100. It broke below the 100. And with the 100 right now at 1182, it is back towards the 100-day moving average. If we draw some Fibonacci in from the February lows towards these most recent highs, what we can come across is that this level of support was at its first Fibonacci level, and it has broke below that, right pretty much towards the 50% Fibonacci level. Therefore, if there is any continued selling and you're looking for the next spot where there's going to be a bounce, that level will be at 1130, which is actually a pretty significant level. And I say that because if I move the Fibonacci down towards this area here, put in the 76.4 level, on the linear time frame it has the exact same number of 1132. Now there's a difference with exponential Fibonacci and linear Fibonacci, and generally speaking you really only need the exponential Fibonacci when the price movements from point A to point B are pretty big, and in this case they are. However, there is a lot of people that do look at the linear Fibonacci more often than they do the exponential, because those calculations are so much easier to come across. So now what we're going to do is we're going to take a look at the gold to silver ratio. We're going to first show the GLD, and we're going to compare it with SLV, and then we're going to put in the gold to silver ratio chart on the GLD to SLV ratio on this video. And we can see gold here had its top towards this level and has been just selling off pretty much at new lows, while silver, on the other hand, has really not done as bad, as it's been staying in the range for quite some time on the intermediate term time frame, that is. So what we'll do is we'll do a comparison with the SLV, and this way we can see lately how silver's been outperforming gold, and before then it was gold outperforming silver. For if we adjust this chart here, we can see that, say, since the 8th of July at 2 o'clock, gold is down right now 1.1%, where silver is up almost 1%. If we switch this to, say, a 30-minute time frame, say start up towards this area here, we can see gold's down a third and silver's up 1.6. So what this is telling us right now is, as of late, that silver has been outperforming it. But when we take a look at this on different time frames, say the daily time frame, we can see that, say, since the 23rd of October of last year, gold is up 11.5%, where silver is barely positive right now. If we move this to a weekly time frame, we'll go back to the 2007 area, or 2006. Since that time frame, gold is up 80%, silver is up only 31%. And from the lows, because of how volatile silver was or is, since that period, gold's only up 40%, silver is up 60% because when it bottomed, it went up more aggressive based on percentage moves. But the same was true for the move to the downside. For if we look back at how gold had performed during this run of the downward cycle, from the period of November the 23rd, 2007 to December 1908, gold was up 1.69%, where silver was down over 25%. And that's because gold went from about 1,000 to about 700, which is losing about 30%, where silver lost over half of its value during that time frame. So now what we're going to do is I'm going to go to some of my original charts and look at the GLD to SLV ratio. And this is the ratio of GLD to SLV. If we take the COMEX closing price of 1182 on gold and divide it by 18 on silver, that gives us a level of 65 and 2/3 in 1 right now. And it states here it's about 6.55, so it's relatively close. You can multiply this number by 10 to get what the approximation for the ratio happens to be. As far as the moving averages are concerned, this line here, it represents the 5-day moving average. We also have not a volume weighted average price, but a running average since this level and since this level. And what that means is that its median area is upwards to about 6.61 or 6.62. We have this in a downtrend, sort of like how we are seeing gold, meaning as of now, the ratio to gold to silver is going lower, but overall, we are still pretty much within this range of 7 to 625. Now, if you want to do Fibonacci just manually, you can take the difference of 7 and 625, that is 75 cents, times it by 0.382 for the 38.2. So now you got 28.5, which you can add on from 6.25, which would give us Fibonacci of about 653 as an area. And it did find Fibonacci pretty close to that area, which is quite remarkable considering this is something really people don't trade. But they say Fibonacci is very natural. Now, if we take a look at the 61.8, we take the same 75-cent difference, multiply it by 618, and we add that on top of 6.25, which gives us 671. Which means that the next Fibonacci is right up towards here, which was an area in which encountered a level of resistance. And if we even go back to 2008, during the big highs, gold was up to 1029, where silver was at around 21, which means the ratio then was about 50 to 1. So during that time frame, the ratio has went from a 50 to 1 level upwards to about, well, obviously 65, and at the bottom at the end of 2008, gold was at 700 and silver broke below 9. It was about 850, which means the ratio was about 82 to 1. So it's going back and forth right now. I myself, and this is an opinion only, think that the ratio is going to go significantly lower over the next so many years. That doesn't mean that in the next so many months that this thing can shoot back up to 70 or 80 to 1, but as of now, it seems as if based on both the usages that gold and silver has, that I would predict that the chances are likely that it can go extremely much lower. Webbot mentions that it could even break this level of being even. Right now it's at 65 and change, meaning it can go below 1 to 1. Whether that will be the case, I really don't know. I can only go with fundamentals because right now the technical state that gold to silver ratio should be going higher. This is only the intermediate chart. What we'll do now is take a quick look at the longer term chart. And this is the chart for the gold to silver ratio going back to 1968. And before then, well, it was a ratio lower. 20 got up to 40, then it broke this resistance up to 60, then up to 70 something, and up to 100. A trend line can draw these points in here roughly with this moving average, and then a trend line down towards here with these tops thus like this. And since then it is consolidated in towards a time range. What we'll do is some Fibonacci. What we'll do is we'll take what the lowest and maximum numbers happen to be. So what we'll do is a minimum, find out what this lowest figure here happens to be, and let's see what comes up on the result. And that comes up to 1399. Find out what the maximum is. And that would be this level up towards here. And that gives us a total of 178. So we'll say 14 and 100 just to make it easy. And what we'll do is we'll go to an exponential Fibonacci calculator and see that from the 14 and 100 level, we have 47 and 30ish or so as areas of resistance support. 47 works out to about here, which is where it did find a level of support. And the one below that is 30ish or so. So if we continue to go lower on this chart, you can expect that this area here would be the next support. 30 would be the next significant lower area if it happens to continue to go lower. Now, as far as its next upside, what you do is you take this support level of 40, the resistance level of 80, which gives you 40. You take 40, you multiply 1.618, and that would add on to 40, which would give you a total of 104. So its next upwards resistance level is at the 100 area or so. And if we take a look at this chart logarithmically, it'll look somewhat differently. We will change the scaling so that we can have, we'll say 13, as 14 is the lowest point on here, and 110 on the top. And the logarithmic chart shows it a little bit different once it actually comes up. There we go. And we can see that the retracement that it has had has pretty much only been small. That's why it's only been a 1/3 retracement. Let me just move this chart down so you can see the top of it a little bit better. What I don't like about this spreadsheet is that when you put so much into one spreadsheet, it really can cluster things up. I gotta make more individual spreadsheets, but nonetheless, we can, like I say, you can see that the retracement has been very small on an exponential case, which is, like I said, why it's the first third. And we'll see what happens over the next little while. But thank you for watching this video and have yourself a great day.